The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. On the day after the anniversary that we all hate to think about, that's the World Trade Center. We're going to have Arch Crawford as our guest today. I was speaking with Arch at 8:30 in the morning, and we saw the plane hit together back in 2001. On Tuesday, we're going to have Alfie Lavoie, one of the brightest minds in the astrology world, is our guest. And again, on Wednesday, we're going to have Bill Meridian from Cycles Research out of Vienna, Austria. And if you remember, about a couple of months ago when we had him on the show, we asked him about the election, and he saw a lot of health problems in Hillary's chart, and it looks like some of that has started to unfold. So we'll see how this works out. Remember, you know, astrology is just a way of looking things a little bit differently. It doesn't work all the time, but it does work some of the time, most like everything else. Let's start out here with the Dax Index. As you can see here, last night in the DAX, we made the 1.618 expansion number from the September 1st low. And also Norm Winsky did the same thing, Marshall. Thank you for reminding me. He said the same thing. That's correct about her health. I forgot all about that, and I talked to to Norm more than I do Bill. Okay, let's get back to this DAX. We made the 1.618 expansion from the September 1st low. If we look at the S&P 500, what we did on that same relationship, the 1.618 relationship comes in at 21.26. So we went just about 22 handles below the level of the 1.618. That means that usually on the any rally back, the 21.26 area should be some area of resistance. So we want to watch that very, very closely. Now something really dramatic happened this week, folks. First of all, there was virtually no news item to tell us that was going to happen. And that's really one of the things we want to keep in mind. But if you remember, we were talking about the Hang Seng Index and what it looked like on Friday. You'll notice we had made that perfect 1.618 or 0.618 expansion from the high in March of 2015. We also, the ABCD pattern was perfect. The CD leg was 1.27 of the AB leg, which is usually what you get when you get a gap up like this. And then last night, the Hong Kong dropped over 500 points, and I believe it closed down over near 700 points. So this is a sign that with this big island reversal, well, it's not an island reversal because we didn't take out Monday's low on the first hour. It took several hours, and we didn't quite open low enough to do that. But that's a pretty negative pattern, and we're seeing this, all across the board. If we look at the you can look at just about anything, and that's and you'll see that you'll be looking. If we take a look here at the Dow Jones on a weekly basis, you'll see we have this big wide range down after the completion of the butterfly pattern up there at the 1.27 number that it hit at 18,690. That was the high, and now we're a little more than 700 handles below that. And that would tell us that we're most probably with this long range bar, we should be ready, to go a little bit lower. Now, one of the things that we have been mentioning here is we thought that this VIX index was a little bit oversold, and we've had a pretty good move here in the VIX, but not much. If you'll notice here on the weekly basis, we're still down in the area of, major consolidation. We've had major bear markets. You can see the 135 pattern over the past year. that told us we were most probably, haven't turned yet in the VIX index. However, if we go to the daily index, and this is what I would like to keep in mind now, is you'll see on the smaller time frame, you'll see that we did make this 135 pattern in the VIX index that we saw a week or so ago. And, well, it was last week, as a matter of fact. It was a perfect 78% retracement. We had higher bottoms, and that was indicative of a possible move coming. As you can see, we were looking at this when it was around 12. It's around 17 now. But what we'd be expecting, if you notice what happened in last June, this was right into the Brexit. You'll notice that we had a situation. We got a caller in. We'll talk about this in just a minute. We've got a call from New York City. Marianne, are you there?
Hi, this is Maria. How are you, Larry?
Very good, Maria. What can I help you with?
I would like to know, you mentioned that we hit some key levels on the DAX, the 1.618 expansion on the 30 minutes. But I was looking at the 60-minute chart of the ES Mini, and if you look at the low of August, beginning of August, we actually just hit this morning the 1.618 expansion of that low. So I was wondering if it means something for you.
Oh, absolutely. It certainly does. What I was doing is I was comparing the time frame between early September to both of those, and we went far, far lower in the S&P. But you're right. We did hit some very strong support there at that 2102 level, 2101. That is definitely spot on. We need to be watching that very, very closely.
Okay. That sounds good. Thank you very much,
That's all you
Larry.
needed?
That's all I need for the time being. Thank you.
Okay, thank you for calling
Bye-bye.
in. I appreciate it.
Bye-bye.
You bet. Okay, now we'll talk just a little bit more about this VIX index. You'll notice that I'm expecting to see a move like we had going into Brexit. I don't know what's going to cause it, but that should be the initial thrust. That would take us from usually that was about 15 points. So 15 points are nearly off the bottom would take us up around near 25. And that's where I'd be looking at the potential for the DAX or the VIX to do this. But we also have the potential for something, really, really big. And that's the key thing to look at. Now, two things I want to give you a little bit of warning about. The first one is this, and this is the fact that we have a record number of people that have puts. I don't know how that can happen, given the fact that the market is way up in the air like it did, but we'll show you the chart that was sent to us by one of our, hold on here a second. It was sent to us by one of our listeners here at the TFNN. It shows that the equity call to put ratio is as low as it's been ever. I mean, that ever is a long time. So this might mean that the market is, grossly oversold. That is certainly a possibility. So keep that in mind. Also, from one of our listeners out of Australia, we got a very interesting chart that I really think we all should save this one because we'll need it down the road for sure. And that is the chart of what are the trading limits if something happens, really bad, where the market drops, 7%, 13%, or 20%. That's an outlier event. It almost never happens. But when it does happen, you have to be aware that some of these rules that we have are very important. So save this chart if you can. It shows you that 7% down will be at 1968 in the S&P. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm going to take you down memory lane here. I watched most of the programming on the World Trade Center yesterday, like a lot of folks. What was amazing is in our neighborhood, we usually have a lot of people put up flags, but there were actually only 4 flags flying in our neighborhood yesterday, which was, I thought, kind of sad. Anyway, let's take a look at what happened. If you'll notice here on the big gap down, you'll see it in this red box during the time the market opened. Actually, the market was still trading when the first, we had overnight trading, and that was about 8:47. The first plane hit. We didn't know really what it was. Arch and I were talking when it happened. Arch said right away that's what it was. Then a little bit later, the second one hit, and that was, the market basically had closed then. We were trading down about 7 handles in the S&P. We were trading around the, I think 1080 level in the futures, as I recall, and the market actually was down about 7 points, as I recall. Then when the second plane hit, the market the market stopped trading. That was it. And the market didn't open again until September the 17th. And as you'll notice that right after the opening, it made a bottom, which was a 1.618 expansion, and it rallied, for 6 months. It rallied from September all the way into March, and you'll notice that it hit the 61% retracement of the 2001 high 3 different times. It hit it in November, it hit it again in January, and then hit it again in March, and then it went down and made a 1.618 expansion into October when it made its final low. The answer to this is it's not the news that makes this stuff go up and down, folks. It's the cycles, whatever they are, and sometimes they work better than others. But if you use that as your guideline, you have a pretty good idea of some of the things that'll happen as you go through this. Now, we also want to take a look what happened after that time, because I want to show you the same thing, because we had a situation, if you'll notice here, after we made that bottom, we went up for 6 years, 5 years, up into the high of 2007. And you'll notice that the key point there was that low in August. That was a really key low, where the Dow was down over 300 points that day on August 15th, 2007. The NASDAQ was almost unchanged, and the Russell was actually up a little bit. I was talking to Tom O'Brien, and we said, my goodness, that happens to be, this has got to be really, really bullish to the NASDAQ and the Russell, because if you can't push it down, then it's, it's going to be something that is really, really bullish. And as you can see, we broke down and we rallied up to a 61% retracement into March of 2008. And then we started the big too big to fail bear market that took us down quite a bit. Now, I want to give you a quick example of another situation where we had the Dow down 400 points yesterday, and yet look at this stock, Wynn Resorts. You have to have a lot of confidence to buy a stock when the Dow Jones is down 397 points. That's the bottom line. Now, I know it stopped right at the 61% retracement, but I'd be very careful. Well, you don't have to be careful just as long as you put a stop in, but we should have resistance here at 98.50. But for the stock to be up that much, and it was up quite a bit. It was up about 3.5 points. To be up that much in a down market really is indicative of you got to be really careful. In 1987, on the crash day of October 19th, there were several thousand issues. I think there were 1,800 issues at that time, and there were only 13 issues that were up. And if you followed those 13 issues after the bottom was in, you'll see that those were the best performing stocks, because it takes a lot of guts to buy any stock when the Dow Jones is down 16.5% on one day, which we were in October of 1987. So these are just some of the things that I remember from old history, but we've got to watch, because all of these things, do have a tendency to change. Now, if we look across the globe at some of the major things that we've been watching here, we've already looked at the Hang Seng Index, what it did. If you'll notice here, the Japanese market has completed an ABCD pattern at the 50% level. It's also, it's completed. If we look at the emerging markets, which is the bearish of all of the countries, and that's, you'll see this thing has been in a bear market since, I think since Moses floated down the aisle, well, at least for 5 years anyway. And as you can see, we rallied again right into major resistance with an ABCD pattern right at a 61% retracement. And of course, we closed lower, so we'll see if this is going to be something different. Now, something could have happened yesterday that is, not yesterday, but Friday, that changes the whole ball game, and that is a statement called "The Change in the Continuity of Thought." This was done by John Galbraith, the prize-winning economist, back in the 60s. And basically that means that models that have been working have stopped working. And that brings to this thing we call the change in the continuity of thought. In other words, people that were thinking one thing all of a sudden wake up one morning and realize that their model is broken, and that causes, something, really, really dramatic to happen. Now, if that's the case, we certainly had quantitative easing for a long time. What's interesting here is in this downdraft that we've had over the last 3 or 4 days is that stocks and the bonds have come down together. We didn't even have a flight to quality in bonds and notes with the Dow down 400 points on Friday. So this is a real key thing, to keep in mind. That's the main thing that you want to watch, because there is that possibility. Now, we have reached, like we mentioned, and Marie called in about the support that we have at 2,100 in the S&P. But remember, folks, in just 3 days, we're down 85 handles. That's a lot of wide-ranging bar. So you got to pay, very, very close attention to it. And we see some chart patterns in some of these things that are a little bit scary. So you want to remember that even though we're having a correction, not all these corrections can be bought. That's the That's the key thing to look at. One particular chart that we've been watching for a long time that now is incredibly bearish, and I'll bring this up to you, and it's also related to interest rates, is the utility index. Now, you'll notice we're sitting right at a 78% retracement of the low that we made back in May. That's correct, but we do have the ABCD patterns measuring down, quite a bit lower. So this wide-ranging bar that we have is one of the worst we've had on one day in quite a while. So something has changed for sure, and that's the main thing that we want to remember here. That is the possibility that maybe the top is in for a while, and we could be in for a maybe even a 3-day correction or something. God forbid if that was the case. So we'll see. Anyway, we're going to have Arch Crawford on at the break, and we'll be able to chat with him of a few things, and we'll want to watch these things, very, very closely, because these markets have a tendency, to rally and get out of harm's way in a hurry. So let's just keep our powder dry and see what's going on. If you were fortunate enough to buy the VIX calls, I would just stick with them and see what happens. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we're going to have Arch online. Arch, are you there?
I am here.
All right. The first one we'll start out with is your headline of your newsletter from August the 29th. You're showing the New York Stock Exchange 52-week highs and lows. We'll do that, and then I think you have some other charts that you want to share with us also.
I just hit send about 10 seconds ago.
10 seconds. So that's
like a minute or two ago.
Okay, just let me see here because it only takes me a second. Here we go. We got the charts. There we go, Larry. See, well, you want to start out with the bond, right? 10-year bond?
Sure, that'll be fine.
Okay, there we go. I can remember us talking on the phone 15 years ago, Sam, when the first plane hit, and then right after that, folks, you don't realize this, but when the Pentagon was hit, Arch called me 5 minutes before it ever hit the news. You remember that, Arch?
I don't remember where I got it from, but I got it from somewhere.
Yeah, I don't know.
Psychic.
I know that, but we didn't have Twitter or anything back then either, did we? It was nothing like that.
No, I don't have Twitter now.
Yeah, I don't either. I don't trust those social things. It's well, who knows? Anyway, let's go ahead and talk about the notes here, and then we'll move on to the oil. So why don't we talk about the notes first?
Okay. Well, it's in a long-term downtrend. I think I didn't have that in the newsletter. I had it in the newsletter 2 or 3 months ago showing the weekly chart in a very, very long-term trend line down, trend channel down. So it has to go to like 250 to 3, over 250 and then over 3% in order to change the long-term downtrend. But right now, we have Friday's pop up, broke a downtrend for this year, and solidly so. But there's a lot of resistance. It's like 169 right now, up 2 ticks more. But there's a lot of resistance between here and 180 to 190. So I think it could go a little higher. I don't believe the Fed that they're going to jack rates, or if they do, it's going to be much worse than people would expect.
Yeah, it's amazing. It's amazing to think it's been 9 years since we've only had one rate increase in 9 years. They're playing with the business cycle, and that's not good when you fool Mother Nature.
I mentioned that in the last letter, too, significantly, that we're probably in a Kondratiev flat period, getting ready for Kondratiev winter, which, lasts like 12 or 15 years.
Arch, someone's asked a question about Kondratiev. They hadn't heard of that before. Could you give us a little review of Nicholas Kondratiev's work?
I'd ask them to check on some cycle work. The Kondratiev and 2 or 3 other cycles are very important. The presidential cycle, of course, that's what we call it, but it was happening in foreign countries and it was happening in communist countries, and so it's a real cycle. So and the seasonal patterns are very, very important. And the Kondratiev is one of the longer. It's, I think, 49 to 60 years is what Kondratiev said, and it's been averaging about 52 to 56 in the last 2 or 3 of those cycles. Years, 52 to 56 years. So that's what the Kondratiev was a Russian economist. He discovered that the waves were cyclical, and he told his communist government, that these were natural waves and that they probably couldn't do much about it, and they threw him in prison and later shot him.
You should never shoot the messenger. Yeah, not to laugh about it, but it wouldn't surprise me because things like that happen. They put Galileo in the Catholic Church, put Galileo in prison for a bunch of years because he thought the Earth was when he talked about the Earth being round and all the other physical, scientific stuff that he was working on.
And it went around
Let's
the
go move
sun,
on.
which was anti-church.
Yeah,
But
that's for sure.
they just had him
Let's
at home prison. He couldn't leave home, but he was not in,
so he had
in chains or anything.
Oh, I didn't realize that. I thought he was actually he was under house arrest then.
That's right.
Yeah, and he didn't live in a ghetto, so I guess he was okay. But he couldn't go to the movies or the racetrack or any of those things. So shit, that's not even fun. Yeah.
He couldn't go out and drink with his friends, but they could come over and drink.
Yeah. Yeah. Okay, let's take a look here at the next one, which is the oil chart that you brought to us, the daily chart. What are you saying here?
I'm saying here that I've been very, very negative on it from all the way down from when it broke 88 or 90. And I said at 26 when it made a double bottom in February that, hey, it seems to be holding here if it broke, and it broke up through 35, that I turned short-term positive on it. And then it went back up to the September-October high and a little bit above it in June. And now it's pulled back down again. So I'm saying it's a possibility that it's a long-term bottom with the left shoulder last August, the head in January, February double bottom, and a right shoulder in early August. But the right shoulder is still being developed, and it's a triangle pattern right now, and it could go either way. If it breaks above 50 on increased volume and momentum, it could be a signal that the bottom, that a long-term bottom is in. I'm not real sure that it's going to do that. So if it breaks back below 40 again, below the 200-day moving average at about 40 and a fraction, and the 382 retracement line at about 41 and a quarter, if it can break that again and break the low actually in early August, then I think we're looking at 26 again.
Wow, that would really be. I know gas here in Tucson is only $1.85 a gallon, so it's pretty cheap compared to the rest of the country, and of course the rest of the world. That's very, very cheap. So
we're near San Diego, where I think they do a lot of the oil.
Mm-hmm. Is the other question someone's asked us is the relationship between oil and gold, has that been holding up?
I would not say that it is one-to-one by any case, but if the dollar goes up, these things tend to go down. If the dollar goes down, these things tend to go up.
Arch, we got to pay a few bills here, so stay with us and we'll have you right back, okay?
All right, sure.
Thank you.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, Arch, we're with Arch Crawford of Crawford Perspectives, and I'm looking at the first page of your newsletter. And you want to go ahead and tell us what you're seeing with that 52-week high-low?
This is New York Stock Exchange 52-week new highs. Mm-hmm. And that gives you a pretty good trend of the mass of things if you're looking at the new highs and the new lows, and the new highs minus new lows are all different ways of looking at it. But right now the highs are the most are ruling the roost, and we had a sharp pop up in the new highs from a low in it looks like January to a high 13th of July, and it really spiked that last 8 or 10 days, and I consider that a probability of a blow-off move, and they've come down quite a bit since then. It's not into any danger levels, but it has had the spike up and the spike down, which I believe is an indication of a very sudden change in psychology. Mm-hmm. So now the Fed is playing games with us, and all these things that we just talked about, the interest rate just popped up out of a triangle, but it's still got a lot of heavy resistance. The oil, the gold, and the dollar are all in triangulating sideways patterns, waiting to see what the Fed is going to do. Mm-hmm. Oddly, the announcement on the 20th is in the middle of a very, very powerful astrological stuff. The fall equinox is the 22nd. Mercury turns direct, I think, on the 21st, and the announcement is on the 20th. So, wow. And if you remember, after 9/11, the market really tanked, and I had predicted it in my newsletter that the market would crash by October the 5th of that year, and that the U.S. would be at war around the 7th or 8th of September 2001. And I don't know anybody else that made that prediction, but what I'm saying about that is that it bottomed I think the fall equinox was Saturday, and it bottomed on the option expiration on that Friday.
I remember,
it's
Arch.
often turning points, whatever markets you're looking at. I remember Gann in one of his books said to pay attention to the equinoxes and solstices and the middle day between them. And that's one of the few things he ever said about astrology or seasonal pattern that I remember offhand.
Arch, I remember the call you made in 2002 on gold when it was at 260 an ounce. You put out a really strong buy recommendation in gold, and
actually it was in April of 01, and it was because of a Jupiter-Neptune trine, which would make it would make people feel good and not worried about things that gold is good for. So I got it at 258 in the newsletter and stayed along most of the time up to the top, near the top. And when I got stopped out, I stayed out most of the last 5 years. Most of that time, I took 2 long trades in the newsletter and got quickly stopped out in both of them. So I was out most of the 5-year decline, and I've turned quite bullish on it since we broke out of the long-term downtrend. I think it was around 1245 or something like that, back early in the year or late last year.
We have a question from one of our listeners, Arch, about the new world currency that is supposed to come out on September 30th. You heard anything about that?
Yes, I know Rickards was talking about it a lot, and the 30th is our fiscal year end of our government. So that's the important thing about the 30th. So this is a really important month, being, seasonally the worst month of the year, and all these things coming to focus at this time. And it's also, I believe, it has to do with hurricane season and natural cycles there, in that we're going from the light to the dark and from the warm to the cold in the northern hemisphere, and where most of the markets are. And I believe that has a strong effect on. I did a study one time about all of the biggest down days in the market, percentage-wise, and I put them around the calendar. And 1/3 of the biggest 2/3 of the biggest down days occur in 1/3 of the calendar year, and it's centered on the fall equinox.
Yeah, I can remember going.
Big whoop.
Well, I remember going to Mexico to see the pyramid of the sun, where on the equinox, the shadows hit it so perfectly it makes 45-degree angles as it moves over the horizon and hits the midheaven right at the top, and then it goes like a snake into the jungle. Just amazing how accurate the thing is. It's just amazing someone could build something like that. But happens every year on the 22nd of September, and there's about 250,000 people there, looking at that unusual phenomenon in central Mexico.
It's quite something. My ex went there once.
Too bad she should have stayed there
at the solstice.
Yeah, but she should have stayed there, maybe, huh? Okay, let's get on to. No, I know that. Hey, listen, we're gonna have to take a tiny break here very, very shortly, but we're going to get back. We want to let the folks know how they can reach you and everything when we come back, to give yourself a little time to show them how to go through it. But we want to cover the momentum measures that you're looking at, the lows of the last 3 decades. I'm going to post that chart so the folks can take a look at it, and we can start it. And then when I hear the music for the break, we can take a break and then cover it when we get back. How's that? So fire away with
fine.
Go ahead.
Okay, fine, sure.
Go ahead. Just go ahead and finish this. We can start the SPX and Dow Jones, and then maybe get to the other ones when the break, where the break's going to come, Arch. So we might as well not start it now because it's going to be too close now. So that was, we've got a break coming. In fact, I don't know why I don't hear the music because it should be happening, but we'll see. Maybe they're not going to give us a break today, I guess. I know one thing. As soon as you start talking, the music will start. So go ahead and start talking, Arch.
Okay. Well, we went into this amazing flat period, which was the tightest movement of the major indices in at least three decades.
Arch, the music is playing just as I thought.
We broke it sharply on Friday, and it's a very interesting period.
Okay, stay with us. We'll finish it up. Okay, hold on.
Okay.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and to reserve your seat today, visit the front page of TFNN.com now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Arch Crawford of Arch Crawford's Perspectives. Arch, I have a question from one of our listeners about the election. I know you hear it, but what's your best guess looking at the charts of these folks?
My best, I would say it's close to me whether Trump will win or that things will be roiled in politics and in economies, and that maybe even in world tensions, such that the same guy stays in office.
Say again, please.
I'm saying that it's very possible that things will be so disturbed by then that the current man will stay in office.
Wow.
Perhaps
Well, I guess
under martial law.
Oh boy. Well, you're a bringer of good news today, my friend. All right, let's get back to your chart. Tell the folks how they should reach you, Arch. We've only got a couple of minutes here, so give them the best way to contact you to get a copy of the letter and stuff if they have any questions.
Well, the easiest way is to Google Arch Crawford, because Crawford Perspectives has a lot of letters in it, but it works. If you Google Arch Crawford, the first thing or second thing that comes up is the website, crawfordperspectives.com. The phone number is 520-577-1158, and we're here regular business hours and usually some extra.
Arch, I want to ask you another question, Arch, that you concerned me about what you just said about martial law and stuff. I mean, do you see something astrological in the U.S. chart or something that makes you feel that way?
Well, I wrote a piece in 2006 because the progressed Mars in the U.S. chart was turning retrograde for the first time since the Republic was founded. And I said that we will be a weaker army. Everything masculine will be de-emphasized. And they've certainly done that.
Hey, thanks for joining us, Arch. We got to end the show. Really appreciate you having you on, buddy. Bye-bye.
Take care, buddy.
You bet.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.